Hello, everyone, and welcome to today's webinar. I'm Nick Zulovich, part of the team at Cherokee Media Group and senior editor of Subprime Auto Finance News. For today's webinar, REPAY and Payix make collections better. We have a great session in store. But before we get started, just a couple of quick housekeeping items. We are recording today's session, so keep watch of your inbox for a message containing a link to it coming to you as quickly as possible. We are recording today's session, and after the prepared presentation, we'll have a Q&A segment, and you can submit your questions using the chat function here on the Zoom platform. And if we run out of time, don't worry, because we'll forward your question directly onto the team at REPAY and Payix so they can reply to you directly. So our special guests for today's session include Preston Cecil, who is the executive co-founder of Payix, and Chris Arnett, who is the senior vice president and head of product at REPAY. Gentlemen, thank you again for making time for today's webinar.
Thank you, Nick, for having us.
Absolutely. Pleasure to get it.
Well, before we get into some trends and other insights about the collections world, Preston, let's start with you with just a quick kind of nuts and bolts and introductory question. Just again, when did the acquisition come together, and why did Payix decide to join the REPAY team?
Yeah, great question, Nick. So the acquisition was actually announced on Monday, January 3rd of this year. So we're about 2.5 months into it. We're loving it. It's been going very well. And why did we choose REPAY? Well, we really, at Payix, we really knew our company was kind of at a tipping point where, our growth had been phenomenal and it was about to accelerate even further. And we really needed a lot of resources and capitals to support those resources to make sure that our platform was going to scale out, the way that we wanted, which is the right way. And so what we found in REPAY and meeting with their team and understanding their company and their vision was that it was better than a traditional funding round. It was the ability to truly partner with a strategic that had the right people. It was the right company that had experienced leaders. They knew our space. They operated in the same verticals of the payments industry that we did. And they shared our values and were really committed to providing exceptional customer service and experiences for the lenders that they serve today. We really believe that the right partnership can do a couple of different things. One, it's going to accelerate our technology and our sales initiatives, but really, them having been in this marketplace for a lot longer than Payix, right? We're a newer company. They had something that you can't buy, which is experience, right? Trial and error, things that we just didn't have time to go through those learnings. And, we really believe, working with REPAY is going to allow us to offer a more robust, scalable solution to meet the ever-growing needs of the industries that we serve today, the debt repayment market, the loan servicing market.
Excellent. Preston, thank you for those perspectives and congratulations on the developments. Chris Arnett, your perspectives on welcoming new teammates at the beginning of the year.
Right. It was a very exciting, opportunity that started presenting itself. We knew of Payix. Many of us has known each other for a long time. We're in the same circles, the same conferences, and had a lot of conversations. So from the very first conversations the Payix team had with REPAY team, we're impressed with their technology. They built a great solution in the marketplace. They had a great thought leadership and were serving their clients very, very well and understood the needs of both the lender and the borrower. In addition to that, they brought a great reputation. That's important to REPAY. We want to bring that good reputation to companies that we partner with. and they were a leader in the industry. So again, in the auto markets, we're really excited about their borrowing facing technology, same as in collections. And I think the two of us will just really be able to collaborate on bringing the best of ideas to the market as we begin to look at where we want to see the shift happening and help that happen as the borrower experience is changing every day, as more and more digital options are available to them. So for us, we're extremely excited. We welcome the team. The collaboration has been really great so far, and we're continue to see a lot of return in our initial investments in that. And we're just going to continue to grow together, bringing the best of everything we can to the market together.
Very nice, and certainly shift is probably an appropriate word there, Chris. To continue with you, just what might happen with the Payix brand name? When will clients and partners start to notice the REPAY branding more? How do you see that transition unfolding?
Well, we're going to keep the Payix name and brand for the near future, right? They built a great company. We don't want to take that away. We actually want to begin a very slow transition that's carefully evaluated and planned. Very subtle things you may notice over the coming months, and you may have already noticed the Payix logo now refers to a REPAY company. So it's the very subtle hints where we want to let the market know that REPAY and Payix are coming together. And we're going to continue the investment in both sides, continue using the logo and the brand that's been built up by the Payix team. And this will be done in gradual phases. Nothing's going to happen overnight. Our goal is to ensure a smooth and easy transition for our employees, our clients, and our partners. So again, we're not going to disrupt the space and just wake up on a Monday morning and there's no longer Payix. This is going to be a very thought out, well orchestrated shift into the REPAY brand over the foreseeable future.
Very good. That's great to hear. Great to hear. And Preston, let's turn back to you. And I would presume this is probably the umpteenth time you've been asked this question. But since the announcement was made, what does the acquisition mean for Payix clients? How have you responded to the client base about what's happened?
It's been fantastic, and to be honest, as Chris kind of outlaid, there's no immediate effects to any of our clients today. In fact, any effects that there will be in the midterm or the long term are all positives, right? They're all enhancements to what the Payix offering that exists in marketplace today. And so I think most of them are really excited. They're happy with what they're getting from Payix today, but they understand that the market is always changing, right? And obviously having a partner with so many resources and so much experience like REPAY and all the different industries that they operate in today, they can really bring a lot of best practices and great research and development and partner with Payix and work together to kind of develop that phase 2 of our product set and how we can combine those technologies to really create something extremely synergistic and new to the marketplace without needing to test anything, right? I mean, we know what works on our side, and for our lenders, they know what works on the REPAY side and for their lenders. And so we can take the best parts of both those little Venn diagrams and overlay them. And I have a feeling there's going to be a lot to gain in that intersection as we kind of put the two companies together.
Very good. A lot of exciting times ahead, no doubt. And for you, Preston, probably one more clarification question you've been asked often is, can clients already use the solutions from both Payix and REPAY already, or not just yet? If you could address that point, what can clients get to as we speak, so to speak?
Absolutely. And it's a fantastic question and very relevant, very timely. So as of today, we are still, operating under the Payix solutions exclusively. But we will be working on the integration throughout much of 2022 and into 2023. And so a lot of the kind of lead up to adopting a new product or a new solution for your company is the planning around that product, the testing around that product, really understanding what it does, how it could fit for your organization. And I would say if there's something that you see in market, whether it be from REPAY or even from somebody else, and something that we should be thinking about, it's never too early to start those conversations with us today. Because, as we work through some of the planning and strategy and all that good stuff, it will allow us to have enough lead time. So when those products are integrated and available to our existing Payix customers today, it's just a light switch, right? We're ready to go. We've done a lot of the heavy lifting up front. It's just getting that technical integration on the back end done, and then obviously working on the implementation at your company.
Very good. Well, again, congratulations to both firms for the exciting development, and certainly all the best as that integration and synergy comes together. Well, gentlemen, let's kind of shift gears here a little bit to discuss the industry itself and how there's certainly a digital transformation that's ongoing. I mean, here we are on using the Zoom platform to have a conversation. Just Preston, we'll continue with you, and then Chris, your thoughts as well. Just how much movement have you been seeing as far as toward a digital first environment and financial services? How much has perhaps the pandemic really kind of pushed the envelope, accelerated things to a degree, especially when it comes to payments and that sort of thing? Preston, we'll begin with you, and then Chris, your thoughts as well.
Yeah, absolutely. It's a great question. And obviously, we started Payix in 2016 specifically to present a digital solution to a market that wasn't necessarily digital first at the time in 2016. And honestly, the acceptance, the demand has always been there. There's just been some reluctance. Sometimes lenders will have their strategy, their processes in place, and it can feel like heart transplant to try and adopt a digital strategy. But one of the benefits that I think, if there were any, of the pandemic and everything that happened in 2020 and 2021 is there really was an acceleration of adoption of the digital strategy, right? Whether it was something you'd always been planning and you just needed some little more oomph to get going on, or you literally had to shut down your storefronts or your collection center and you had no other way to take a payment other than having an e-com solution. I think it was a wake-up call that this isn't necessarily just an insurance product there, to prevent any risk of your service centers being down. But what you learn through that period is that companies that already had a digital strategy in place outperform their peers, and that performance continues forward even on the end of the pandemic, and that you needed to get one, in place very soon to make sure that you could keep up with that marketplace. And if you don't, you won't be around. It doesn't mean you have to adopt a digital product set. It just means your lending organization may not be around in the future as you lose more and more share of the market to companies that utilize those strategies. But what I can tell you is that on our side, we're seeing incredible movement in that digital first mentality, from payments to communication to just overall customer engagement. There's really been no better time, and there will be no better time to prioritize, communication and engagement with your borrowers than right now, right? Today, March 22nd, 2022, if you don't have one, today is the day that you should start those conversations. And it's time for you to position yourself as a financial partner and build those relationships with your borrower by offering them these additional digital options, clear lines of communication, make it easy to have information flow back and forth. That information flow can turn into data that can be utilized down the line to better serve your customers and predict opportunities and risks. And the communication and having that digital strategy, it's going to allow you to reach out to your borrowers where they feel comfortable, right? Where they are, which for most of them, what we have seen and what I've seen for years is through the mobile application, right? Through their smartphone. Even the payments that are coming through your web portal. You can go look at your Google Analytics or any other sort of migrated data source that you have in there to be able to decipher this data. But you'll see that those payments are still coming from a smartphone, right? So meet them where they want to be, which is on their phone, and utilize things like texting, social media, mobile applications, and you can reach your borrower. You can install a customer service agent on their phone 24/7, 365. And the great thing about communication with the mobile technology is that it really fits into their lives, whether they're in the bathroom or they're in a meeting watching me talk to you guys about digital strategy, or they're with their children at a ball game. That phone will tap them. They'll see they have a message that their lender wants to reach them. And when it's convenient for them, they can reach back out and address that, as opposed to a missed call and a voicemail they really don't want to listen to. And so it's really a win-win strategy for both you and for the borrowers.
Very nice. Very nice. Thank you for that great lay of the land of what the industry has gone through, Preston. Chris, your thoughts as well. As Preston referenced, we're all attached to our smartphones nowadays. Just how have you seen the digital evolution happening here in recent weeks and months?
I think Preston is 100% correct in beginning to assess, the digital environment as a whole. Obviously, we see consumers embracing the newest technology trends on their device, almost on demand. They have the options of going to app stores, wallets, and everything, and keeping everything within their hip. I don't remember the exact number, but people, if they lose their phone, they know in 2 minutes. They lose a wallet and purse, it could be 12 hours. It just goes to show you how much we relied on these devices we carry around in our pocket that nowadays are equivalent to the first, rocket we put in space, right? With the amount of computing power. So it's unbelievable what we have in our pockets this day. And as I tell people when I talk to them about this technology shift, I think not only as consumers embrace it, but us who are service providers to those consumers have to embrace the technology change. Just think about how your day's been digitalized, even outside of just your work routine. Me and my family, we actually use the online calendars to schedule dinner now. I make my children put in their homework assignments, which they're not happy about, but I know when something is due, so I don't get the Thursday night 10 o'clock call saying, "Oh, this is due tomorrow. Can you run and get me a whiteboard?" So we're going down that trend. We're down that trend, but as you look at it, it's almost like we're talking about adoption of these trends, but the next generation is already there. There is no adoption. It's the norm for them. They expect this. So we have to embrace that. And as part of that, that's leaving us to digital adoption rates being higher. It's not something I think is going to just peak and go downward afterwards. I think every generation is going to build off the previous one to adopt more and more technologies, more artificial intelligence, and things that they need to make their life easier. As Preston said, that phone allows them to multitask in ways never done before. Remember sitting at home and waiting on the delivery truck between 1 and 8 p.m. Now you get a phone call, says, "I'll be there in 30 minutes. You can take it and get home." So it's changed our life in so many ways. And I think lenders particularly also need to embrace the technology shift, but look at it in two ways. One, what are they offering to their customers? Their customers are doing everything on their phone, whether it's social media sites to streaming movies to paying bills. So it's all there. But on the flip side, we have to look at how our technology is helping our employees do their job, right? How are we looking at new ways of balancing when it comes to being able to push to card funds, right? There's no longer checks going out or ACH. It has a whole back office that's printing checks. So part of the challenge too is for us to ensure our solutions not only help the end customer, but also the clients, right? Do we help the clients perform their job easier? And that's ultimately what we look at this, and we recognize that to embrace the adoption, it's really two sides of the equation. And we need to be able to fit in that to not only help our lenders and our borrowers, but also ensure we streamline their business. I take of what's happened with the pandemic and just think of simple task of accounts payable, where you used to have two people that had to sign a check and they had signed the check and put it in the mail. Well, now those two people weren't in the office for 9, 12, 15 months. So what happened, right? You send a check in the mail for the other person to sign. So we're seeing the digital adoption across the everyday use case from the consumer side all the way to the business side of the house.
Interesting indeed. It's amazing how far we've come of not writing checks multiple times a month to to digital payment options. Again, our two guests, executives for today's webinar, are Chris Arnett, who is the Senior Vice President and Head of Product at REPAY, and Preston Cecil, the Executive Co-founder of Payix. And Preston, we'll turn back to you, and then Chris, your thoughts as well. As you've each referenced, Preston, you said yourself, today's the day, so to speak, to implement a technological strategy. What might be some best practice recommendations to get started on that path? Preston, we'll begin with you, and then Chris, your thoughts as well.
Yeah, that's a great question, Nick. I mean, it's kind of been hit on many times, but I'll just reemphasize it. I mean, using technology to electronically receive a payment or communicate it's just an enormous opportunity for lenders. And, you know, I'll continue to argue it's a necessity now if they want to stay relevant in 2022 and beyond. But I really believe that as you move into a digital strategy, it's better to think about it on the broader approach. And when I say broader approach, you know, the most obvious one being the smartphone adoption rate. You know, you're going to want to have that smartphone, that mobile application for iOS and Android out there for your borrowers to use. But it doesn't mean you give up on the telephone calls, right? It doesn't mean you give up on texting. It doesn't mean you give up on emails. What you really want to implement, and what we really emphasize here at Payix, is the omni-channel experience, right? Because again, as Chris was saying, you know, we continue to see higher and higher adoption of the mobile technology. Some of that is folks that didn't have that option 20 years ago beginning to use it. But a good portion of it is just the fact that the millennials, who were the children, right, 10, 15 years ago, are now the primary borrowers in this market, right? Their age range is anywhere from 25 up to 40 years old. That's right in the core of where your loan borrowers are going to be. But not all of them are the same, right? They're not all created equal, and you still have non-millennials in your portfolio, older folks that are just, you don't want to say stuck in their ways, but they're comfortable in the way that they like to interact with their lender. And so having an omni-channel approach that's fully integrated, not only to each other, so that the mobile app and the portal or the text pay or the IVR or the collector can all talk to each other, but also integrated back to your system of record, right? Whether it's your dealer management system, your loan management system, your ERP, whatever it is, having that fully integrated omni-channel experience and approach is paramount for implementing a strategy such as the one that we're talking to today. And you're really just going to make it convenient for all borrowers across all walks of life to make payments. And in turn, you're going to have better performance, right? Your portfolio is going to perform better. You're going to see that some of the channels, you know, take a lot more of the percentage of payments and communications than other channels. But you still don't want to give up on those other channels. You just want to make sure they can talk to each other, whether it's sharing the wallet, sharing the schedules, making sure that everything's in sync so that if they do something on one channel, they can view the results of that on another channel, and that the system of record is updated in real time. We believe that is the most important part of implementing a digital strategy for your collections.
Very good. Very good. Thank you, Preston. Chris, your thoughts as well.
Yeah, I think Preston hit it right when he said the omni-channel experience, because how I do something this month may not be how I do something next month. You know, let's face it, life is complicated, life is challenging, and you know, the best laid plans can turn sour quickly with, hey, my sick child's at home, I've got to go pick this up, I'm out and about doing errands. And so giving the customers the option to do how they want to do it, when they need to do it in a real time, as Preston said, is the key. That's the driver of a good technology solution. In my mind, that's an omni-channel. You know, a lot of people, what's the difference in omni and multi-channel? And there's a lot of different things, but I think omni-channel is that one that allows me to make a payment this month via text and I was successful with that. And then I can log on my mobile app and see that payment an hour later, right? And it doesn't have to cycle through and everything else. So I think that's really the key, is that omni-channel driving to make sure you are able to meet your customers' demands when they have them, but also on the lenders, making sure that that information is fed into their systems in real time to give them the information as a business they need to do to run their daily operations. So I think that's part of it. We also need to focus on the flip side of that. We talk about receiving payments, but there's also sending payments, right? If you need to send something out, whether it be an escrow-based payment, a refund, a rebate, you name it, the ability to enable that to be received by the borrower in real time is kind of the next evolution of payments. So we want to make sure we invest and we offer technologies that allow you to push funds to the consumer with the same amount of ease that you can accept payments in. And again, in a near real time or real time fashion. There's great payment options in our financial systems here in the United States, but they're getting even better. We're seeing new networks come out for the first time in over 30 years that are going to change the consumer experience and change how they bank. And so a good technology solution with an omni-channel with real-time hooks will position you for long-term success as more and more payment modalities come out, whether that be another PayPal Venmo combination, the real-time payment network, push payments, and there's even more coming out the next 2 or 3 years from the federal government. So we're in a time where payments are really starting to take off of different real-time options, and supporting that in real time via an omni-channel is the way you want to position yourself to be prepared for the future as things continue to evolve in this space.
Again, our webinar continues with our 2 guests from REPAY and Payix, Preston Cecil and Chris Arnett. And if you have any questions for our gentlemen during today's webinar, just use the chat function here on the Zoom platform, or if you'd rather reach out to them directly, their email addresses are there on the screen: preston.cecil@payix.net or carnett@repay.com, and these gentlemen can address your inquiry directly. And gentlemen, as we come in on the kind of the closing segment of our time together, just a couple more questions, and Chris, we'll continue with you with a topic that's certainly been discussed quite a bit here at our shop, and I would imagine throughout the finance company community. Just what do you see as the solutions and tools that are in place for the auto industry to leverage to curb fraud that's unfortunately becoming pretty rampant, both from an origination standpoint and from a payment standpoint as well? Just what are your thoughts there as far as how fraud is infiltrating the auto space, and what finance companies are doing to try to protect themselves from it?
Yes, great question. And it sounds like we're beating the drum over and over, but I think a lot of it really revolves around that little digital device in our pocket. I made the mistake of calling it a cell phone in my house. My kids are like, "What's a cell phone?" Sorry, mobile device is what I should have said correctly. But I think with that device, you really get into almost the ability to do a real-time collaboration with your borrowers or with those that are making payments based off having good fraud detection engine. So we have the ability in near real time to reach out to the customer and ask them, did you make this payment? If not, let's stop it. That didn't exist 5 or 10 years ago. You took it and you waited for the chargeback to hit you. So we're going to continue to see good collaboration with being able to use the third-party device that a consumer owns to authenticate, is that the actual consumer, to help with the loan origination. Again, we've got a lot of data through the open banking APIs initiatives now, through a lot of great third parties that are opening up the ability to help analyze and also help you understand, is this the actual customer you have the other side of that screen, whether that screen being a computer, a mobile device, or even a smartwatch nowadays. So I think you're going to continue to see a lot of investments in mobile devices helping to augment security, and also being able to collaborate with your customers in real time. Great examples are where or a lot of financial institutions, their online banking allow you to freeze your card until you're ready to use it and then turn it on when you're needing to. So that's an example of where letting the consumer be in control of that and being able to reach out to the consumer and say, hey, we're trying to make this payment, but your card is declined. Can you turn on? Yes, I can. Please rerun the payment. So we're going to continue to see a lot of things in the device that the consumers are holding, but also a lot of additional artificial intelligence, AI behind the scenes that take thousands of data points that used to be done by underwriting groups to try to figure it out and do that in a near real time, saying, position of computer, how many applications have come in, what's the income. There's a lot of great tools now that help us to identify customers that can use as part of your fraud practice. I'm not going to say it's ever replace it, because fraud is multiple steps to ensure that no one single solution can be beat. But that collaboration of multiple approaches, I think, will help lend to what the auto industry can do to help mitigate fraud and payments, as well as loan origination.
Yeah, very good. As you articulated, Chris, there definitely are mobile devices that we're walking around with. I can only imagine what the reaction might be is if you asked them what an answering machine was, and that was the reaction to saying it's a cell phone. So, Preston, let's go back to you, and perhaps it's a question as old as payments and collections themselves, but in the advent of technology evolving, what have you seen as best practices with strategies or solutions to try to keep those payments on time? What have you seen developing on that front to encourage contract holders and consumers to maintain their payments on time? What have you seen there?
Yeah, so I'll kind of augment your question a little bit and just say good payments on time, right? You don't want payments if they're going to bounce or
Very good point.
Yeah, so first and foremost, obviously you're going to want to make, if we kind of back it up a bit, you're going to want to make sure that you have debit cards as an acceptance method for repayment, right? Whether you're utilizing the full suite of technology tools or you're doing it old school over the phone. If you're not accepting debit cards today, two things really. One, it is the preferred payment method of your borrowers. And again, I'm going to hyper focus again on millennials, but it is the preferred payment method for the bulk of the customers that are in your portfolio today. And I would challenge you if you think otherwise. But the benefit of the debit card acceptance and that real-time authorization, right? Knowing in real time if that money is available and if it's going to clear, and if it's not, being able to take action immediately on the decline, same day, or potentially even while you still have the customer on the phone. Those are huge, huge benefits to our lenders. A lot of times folks will struggle with the cost of card acceptance versus an ACH, which they may be even processing for free through the bank that does their treasury services. But what they don't understand is that there are fees associated with those bounces. And sometimes those bounce rates, multiplied by the fee that you're having to pay every time one of those occurs.
I think he froze up. He was in the midst of trying to make sure the storm didn't get him. So where I think Preston was going is, there's opportunities with the debit card that just don't exist in traditional payment methodologies. So we're saying checks carry non-sufficient funds, not only for the customer, but also for the lender or the merchant in this case. Same thing with ACH. And so a lot of those things that are operational costs are not necessarily taken into evaluation when considering the acquiring of cards, especially debit cards in this. And so I think when you look at it holistically, you need to look at what is the cost of a non-payment on a channel such as ACH and check. Who has to touch it? How much time do we spend reporting on it? How long does it take us to actually receive a good payment, to use Preston's word there, because that's the crucial part. We all want good payments. And so I think that's where you have to look at it and say, that card, once you have an authorization, that's as good as saying the funds will be there as soon as they're cleared and settled. Now, that's the key to look at in determining how do you justify doing the debit card acquiring. And as Preston was saying, the debit card is becoming the top of wallet card, so to speak, and that's what's very, very crucial, is being able to accept those payment methods that the consumer wants to use as top of wallet. If you're having to go in and change that or do something else, you may resort back to getting a paper check in the mail, which just it covers a higher cost, right? It's a slower payment method, a slower cash recognition on the actual financials, and then you also have the risk of it being bounced or returned, and then you got to go through that whole reconciliation process. So that's really where, as far as a common and effective payment solution, you want to encourage those on-time payments. And the debit card also allows, when you traditionally store a debit card in a PCI tokenized environment, that enables you to do more interaction with your customer. Hey, your payment is due. Would you like to make it? Press 1 on the text. Well, since you have a tokenized debit card, you can facilitate those type of outbound communications. That just drives a better customer experience and helps you to help them make sure they're staying current on the bills they need to pay.
Closing moments here on today's webinar featuring Payix and REPAY, and Chris Arnett is the head of product at REPAY, and Preston Cecil is the executive co-founder of Payix. And unfortunately, the weather that he is encountering might have impacted his technology connection, but certainly the company's website is there on the screen, payix.net, and Preston's email address is on the screen as well, preston.cecil@payix.net. And we are recording today's session, so keep watch of your inbox for a link to that recording coming to you as quickly as possible, so you can review the great insights that Chris and Preston have shared and distributed around your shop. And Chris, to round us out, again, your company's website is at repay.com, and as we continue to roll along here in 2022, what do you see as the major concerns that finance companies should be aware of, but that should be most top of mind for finance companies, that should be on their radar as the year rolls on? What do you, think, Chris?
And there's really 2 buckets I place this in. What do we have control over versus what is the market going to drive, or the government? Obviously, we see inflation concerns. We see the Feds looking at interest rates and increasing those. So there's a lot of things that are really beyond our control, the price of gas. But what we can control, and what I think we need to think about, is how do we prepare for those factors, and that's where we can't control those. So as we think about payment modalities and we think about 2022 and beyond, is our technology solution where it needs to grow from an omni-channel and a payment modality? Can you support multiple types of payments? Will your payment technology solution help you in the back office, your reconciliation, your reporting? Is it real time into your loan management systems? Can you facilitate a borrowing action from a web device? So I think those are some of the top trends that we need to look at, and making sure that as we look at 2022 and beyond, is our technology future-proof? Do we have a good solution in place that's going to be able to continue to grow? Or are we on technology that may be at a point where it's time to look at other options and be able to support the next generation? I mean, technology is changing so fast that we need to make sure that the platforms we build, the architectural approach, and the business are all in alignment, right? We need to ensure that the operational impact can be absorbed through the technology, and we're not creating a great consumer experience or a borrower experience, but behind the door, the operations side is struggling to keep up because they've got 15 different spreadsheets consolidating 15 different reports. One's a check report, one's an ACH, one's a PayPal, one's a Venmo. You keep going, all these payment methods. So we have to ensure that these collaborative omni channels we provide to the consumers have the same thing and the same available for our back office staff who are using these tools. That's what I think about when I look at our products. Obviously the client experience, the borrower experience is crucial, but what's that one thing I can introduce to the operations area they didn't know they needed, but once they got it, they can't live without it, right? That's how I look at it. What's that thing that I can solve that they're used to doing it a way that I can streamline that and turn that into a process that used to take hours, that can take minutes, or better yet, when they come in the morning or in the afternoon, they're really looking at the results of the operation instead of having to perform the operation. So I think as we transition across 2022 and beyond, that's some of the top things that we look at from a product solution that I develop and work with, but also to what we're hearing from our lenders. Are we future-proof in terms of our customer experience and in terms of our back office experience?
Thank you, Chris. And I believe we have at least the audio portion back of Preston Cisa with Payix. Are we able to reconnect with us, Preston?
Yes, Nick, I'm here. I'm here on a phone. We have a little electricity outage here in New Orleans with a storm moving through, but wouldn't miss this one for the world. So.
Oh, very good. Well, I'm glad able to reconnect here, to piggyback off of what Chris had mentioned, ask you, Preston, to round us out, just what you see as what should be top of mind and be watched carefully by finance companies as we go along here in 2022, whether it's specifically in regard to payments and collections or the auto industry in general. Just what do you see as what should be watched as the rest of the year goes along?
Yeah, and as I mentioned before, if you don't have a digital strategy, regardless if it's 2021, 2022, 2023, you really need to start, kind of planning and strategizing around that today. And again, Payix is here to offer our support and talk with you. And if we can solution something for you, we're happy to provide that. But really kind of looking at the industry as a whole and stepping back and remembering my days on the lending side. I mean, you've got a Federal Reserve Bank that's forecasting that they're going to do 7 rate hikes this year, right? You've got the short end of the treasury markets that are 5x what they were at the beginning of the year. And so what I think you're going to start seeing bleeding into to the lenders, to the finance companies, is interest expenses are going to rise, right? And when interest expenses rise, you've got to make up for that somewhere else in your ROA calculation. And so, you're competing with more and more lenders to originate good loans, good credit loans. And, folks are competing at a very high level right now with collateral that might be temporarily inflated as far as the value that they're trading at today. And so one of the places of that ROA calculation, I think you can really get some differentiation from is reduced operational expenses, right? Being able to utilize the digital platform, the suite of tools to really do 2 things. One, be able to serve customers that are good customers and they're going to pay you with less human interaction, right? Give them those tools so that they can self-serve and kind of take care of their own business the way they want to. And at the same time, what that's going to allow you to do is hyper-focus your teams, hyper-focus your collectors and your strategies around those borrowers that are a little bit more difficult to get to make payment, right? The folks that, potentially have the means to, but maybe not the intent, those are the customers we always want to focus on in collections. And, being able to really lift a lot of the heavy work where 90% of your focus is, which is just collecting those good payments, and replace that with digital strategy and hyper-focusing to get some of those, 400, 500, 600 FICOs to perform more like 500, 700, 800 FICOs. That's where you're going to get the swap, right? That's where you're going to be able to offset some of the pain that you may feel in a rising rate environment. And I think that's where we can actually help you, not only, from a customer experience perspective, but from a total, portfolio performance perspective. And we've seen it before. And I think if you have any questions about, whether it's real, we're happy to give you some case studies, let you talk with some of our lenders. If you're
interested in knowing how it would work for you, we're happy to have that conversation, and we're here to help.
Very well said. Again, that's Preston Cecil of Payix and Chris Arnett of REPAY. Gentlemen, thank you so much for the great insights and the intriguing conversation here on today's webinar. Certainly all the best for continued success and integration, and congratulations on working together.
Thank you.
Thank you very much, Nick. Appreciate it.
And on behalf of all of us at Cherokee Media Group, we thank you so very much for joining us, and we look forward to having you again next time.